Hey, what's up, everyone? Welcome back to Stocks Telegraph, your go-to source for all things stocks, market trends, and financial insights. If you're new here, don't forget to subscribe and hit that notification bell so you don't miss any of our future updates. And hey, if you like the content, smash that thumbs up. Got some thoughts on NIO? Drop a comment below. We'd love to hear from you. Today, we're going to dive into a company that's been making waves in the EV market, NIO Incorporated. As one of China's top electric vehicle manufacturers, NIO has been attracting a lot of attention from investors and tech enthusiasts. But with the EV market constantly evolving and NIO facing both big opportunities and serious challenges, how is the company really doing? Stick around as we break down NIO's latest financial performance, what's driving its stock price, and what you should know before making any investment decisions. All right, let's get started by talking about the stock itself. Right now, NIO is trading at $4.77 per share. Not too shabby, but what's the future looking like? Well, analysts have set an average price target of $6.24, which suggests that there's a potential upside of about 30.9% from where it's currently priced. That could be pretty attractive for anyone looking for value in the EV space. When it comes to analyst recommendations, NIO has a mean rating of 2.03, which is just above neutral. That means most experts think the stock is worth holding on to, with some even rating it a buy. Over the past 6 months, NIO has gained 6.95%, so it's been pretty steady despite all the market volatility we've seen lately. Even in the past week, it's up by 2.8%, signaling some short-term bullish momentum. Now, here's the thing to keep in mind. NIO's 52-week high was much higher, and right now it's trading about 50.16% below that peak. This tells us there's significant upside potential if NIO can recover and capitalize on its strengths. Next up, let's talk about how NIO's doing on the profitability front. As of their latest reports, NIO's gross margin stands at 8.65%, which is decent, but still leaves room for improvement. They're seeing some strong growth in earnings per share, with a 13.99% increase expected this year, and a projected 22.88% growth for next year. These numbers show that NIO is on the right track to becoming more profitable as it continues to scale. In addition to that, NIO has been expanding its sales. Over the past 12 months, the company has seen 13.77% growth in sales, which is a solid sign that it's managing to grow its footprint in the competitive EV market, even with all the challenges. One of the key things we like to look at is the stock's performance in relation to its 20-day simple moving average. Right now, NIO is trading 3.41% above that line, which could signal some bullish momentum in the short term. This is something to keep an eye on, especially if you're looking for signs of growth. All right, let's move on to something that gets a lot of attention: deliveries. In November 2024, NIO delivered a total of 20,575 vehicles, which is a 28.9% increase from the same time last year. That's pretty impressive, especially considering how competitive the EV market has become. Out of those deliveries, 15,493 vehicles came from NIO's premium smart electric vehicle brand, and the remaining 5,082 were from NIO's newer family-focused smart EV brand, ONVO. That brings NIO's total cumulative deliveries to 640,426 vehicles as of November 30th, 2024. This milestone is important because it shows that NIO is scaling up its production and meeting the increasing demand for electric vehicles, particularly in the Chinese market. These delivery numbers should give investors some confidence about the company's future growth prospects. Now let's zoom in on NIO's third quarter 2024 financial results, which give us a better idea of how the company is handling the current market environment. For the third quarter, NIO reported total revenues of RMB 18,673.5 million, or about $2.66 billion. That's actually a 2.1% decline compared to the same period last year. But there's a silver lining here. It's a 7% increase compared to second quarter 2024. So while the year-over-year growth wasn't as strong, the company is still showing positive growth from the previous quarter. When we look at vehicle sales, NIO made RMB 16,697.6 million, or around $2.38 billion, which is a 4.1% drop compared to third quarter 2023. A big reason for this decline was the change in NIO's product mix, which led to a lower average selling price. However, this was somewhat offset by a rise in the number of vehicles delivered, so they're still managing to ramp up production and sales, even if the pricing has changed a bit. While it's a slight drop from last year, the fact that deliveries are increasing and revenues are up from the last quarter shows that NIO is staying resilient and managing to grow, even with market fluctuations. Moving on to profitability, NIO reported a gross profit of RMB 2007.4 million, roughly $286 million for third quarter. That's a solid 31.8% increase from the same quarter last year. So the company is definitely doing a better job of managing its costs and improving profitability. Gross margin also increased to 10.7%, up from 8% last year and 9.7% in second quarter 2024. This improvement is a good sign because it means NIO is getting better at generating profit from each vehicle it sells. But it's not all sunshine and rainbows. NIO still reported a net loss of RMB 5,059.7 million, around $721 million, which marks an 11% increase compared to third quarter. While the company's gross profit and margins are improving, it still faces challenges in controlling overall expenses. When we exclude stock-based compensation, the adjusted net loss for the quarter was RMB 4,412.6 million, approximately $628.8 million, which shows a slight improvement from second quarter 2024, but still a pretty hefty loss. So, NIO is making progress, but it still has some work to do when it comes to controlling costs and turning a profit. Looking ahead, NIO is pretty optimistic about the fourth quarter. They're expecting to deliver between 72,000 to 75,000 vehicles, which represents a 43.9 to 49.9% increase compared to fourth quarter 2023. That's some serious growth potential. Revenue-wise, NIO expects to bring in between RMB 19,676 million, about $2.8 billion, and RMB 20,383 million, around $2.9 billion. That's a year-over-year increase of 15% to 19.2%. So if they hit these targets, we could be looking at a very strong finish to 2024. And here's some positive news from analysts. Macquarie recently upgraded NIO from neutral to outperform, with a target price of $6.60. That's a 38% upside from the current price. So there's definitely some optimism in the market about NIO's long-term growth. So, where does that leave us? NIO has shown some solid growth in vehicle deliveries and revenues, and they're projecting even more growth in the final quarter of 2024. While they're still dealing with some challenges, particularly when it comes to controlling losses, there's a lot to like about their future prospects. With positive analyst upgrades and strong delivery targets, NIO could be poised for a strong recovery. What do you think? Is NIO a buy for you, or are you waiting to see more improvements in profitability? Let us know in the comments below. Thanks for watching, and we'll see you in the next video. Don't forget to subscribe, hit that like button, and stay tuned for more stock updates right here on Stocks Telegraph.